Hello and welcome to my YouTube channel. This is a very exciting day because this is actually my first YouTube video that I've ever done. So I don't have all the flashy, fun things that most YouTubers have these days, but if you bear with me, I certainly will. My name is Bethany Roy and this channel is going to be about financial literacy, credit, really having the lifestyle that you want to have, whether you want to travel or maybe have more time with your kids or dive into some hobbies that you haven't really been able to find the time to do. But we're going to start with the basics today, and I'm going to go ahead and take you over to my beautiful whiteboard over here that I prepared for you guys, and also my adorable puppy, Ryder, which he is going to probably be in a lot of the videos because he's my best buddy, so I'm sure you will be seeing him around. So what are we going to talk about today? The number one most important thing is a 3-digit number that controls everyone's life, whether you like it or not. And you probably already know what I'm writing. Your credit score. Your credit score, right? So this number controls your life, whether you like it or not. And I'm going to explain why. Something that you need to know, I'm going to give you the basics, is that the credit score ranges from 300 to an 850. So if somebody tells you they have a 900 credit score or a 250, they probably don't even have any credits, or they don't know what their credit score is because those numbers don't exist. So this is what you need to know. This is the very basics we're going to start today, okay, with your credit score. So I am going to give you guys a rundown on what makes up your credit score. How is it actually calculated? What's important when you're considering your credit score? I'm gonna have to move this back a little bit further, okay? Well, you guys already know your credit score. So we are going to give you the breakdown. So I'm gonna start here with 35% of your credit score. 35% is actually going to be your payment history. Now, right now, we are in the middle of July of 2020 and going through COVID-19. A lot of people are having trouble with making payments. So if you have a credit card and you may not have the funds, of course, make sure your rent, your utilities, all of the basics are covered first, always. But don't let yourself get a late payment, please, because a late payment, you will lose 60 to 100 points for one late payment. You really don't want that to happen. Another reason why you don't want that to happen is because a late payment is very hard to remove from your credit report. Very hard. I have tried it a lot. Our attorneys for the company that we work with, they dispute these as well. And even collections come off easier than late payments do. And for some reason, I still need to move my camera back a little bit. So I'm going to do that. Okay, so no late payments. If you have to borrow the money from Uncle, I don't know, Joe, your mom, your dad, your sister, your brother, borrow the money. Make sure that you don't have any late payments because it's just going to hit you really hard. If you don't remember anything else from this video, please remember to watch out for those late payments because they can sneak up on you. The next percentage we're going to do, and again, this is not the best graph in the world, but I'm just going to go with it. 30% is available balance. Well, there's a couple names for this, but I'm just going to call it available balance, credit utilization. So this is how you use your credit cards. Do you have them maxed out? Are you 30%? Are you at 50, 60%? How to use those credit cards. 30% of your score. This is huge. So I tell everyone, keep your utilization under 7%. That's like the magic number. And I know it's kind of hard to get to 7%, especially let's say you're close to max out on your card. A 7% might be a little tricky. You know what? Don't even go there yet. Just start simple. Start with 30%. Go down to 30% of your, I don't know why I can't write on this board correctly, 30% of your available credits. All right, you want to always know how much it is you owe on what card because this is a huge percentage. These two, payment history and available balance or amount owed, are so important. Moving on, we're going to go to 15% of your score is your length of history. Length of history. I'm gonna give you a personal story for that one. So I'm passionate about this, guys, because we weren't taught this stuff in school, and that's why I'm so driven to be able to educate the masses of the situation that we have going on. So with length of history, my parents always told me if I have a credit card and I'm tempted to spend it, to cut up the card and close the account. Very bad advice. I mean, my parents did the best they could, but nonetheless, I had a Discover card with a $6,000 limit and a 5-year history. And one day I said to myself at the time, I think it was about a 768 credit score at that time, a few years back. And I said, you know what? I'm too tempted by this $6,000. I want to spend it. I'm just going to close the account. And that's exactly what I did, guys. So that actually affects this and this, because you're affecting the 15%, obviously, because how long have I had that account? Well, I had it for 5 years. So I'm wiping away that 5-year history, which was a good history, by the way. And I'm affecting my available balance because I just cut my available balance over everything I owe. Like, let's say I have a car, a house, whatever, you have 2 cars, everything that you owe, I just cut out $6,000 of that. And you want to have a good amount of balance available. So if you cut that down for no reason, I went ahead just because I was tempted. This is what you really need to do. If you're struggling and you think, oh, maybe let me go ahead and cut up my card, there's no point. Even if you cut it up, what hurts your score is closing the account. But what happens is, if you cut up the credit card, you can't use it, right? If you don't use it, the creditor is going to close the account. Over time, they will close the account. I lost about 55 to 60 points when I did that. Totally unnecessary. Totally unnecessary. I could have gotten above an 850 easily at that time if I had not made that mistake. But again, you live and learn. So I didn't really know. But don't close the card. This is what you need to do if you are thinking about closing your card. You need to learn how to budget, because if you're that tempted to spend, and I know some of us have spending problems, spending makes me feel good. I'm the same way. I'm on Amazon all the time. But if you don't know how to budget, it doesn't matter how much money you make, what your credit score is, you're always going to run into problems, always. And I have another video about that I'm going to do. But for now, I just want to let you know that cutting up your card is not a good idea, and closing your account is certainly not a good idea, because it's going to hit you in 2 factors of your credit score. So now let's go to the remaining 20%. So 10% is new credits, and the other 10 is types of credit. All right, so new credit, this would be inquiries. And types of credit is installment versus revolving credits. So first, let's go to the 10% new credit inquiries. Okay, so when you apply for credit, most of us realize that when you go to apply for a car, you're going to lose a few points in your credit score. Not a big deal. Typically, what I see is about 5 to 15 points that you're going to lose when you apply for new credit. So make sure that you just don't do it too often. If you do it once or twice a month, it's really okay. It's just that you don't want to look desperate to the banks that you're just applying for credit everywhere, or look desperate to the bureaus that you really don't have any money, and so you're just reaching, every department store offer, you're taking it, you're getting a PayPal card, you're doing all these things, and you're getting denied. You don't want to do that. So you don't want, because 5 or 15 points really isn't that bad, but when you keep doing it, it's going to keep hitting your score, obviously. So when you're applying for new credit, just be careful. Another thing I would say about new credit is, before you go and apply for a major purchase like a car or a home, I would urge you to at least have a 680 credit score. Now, that's not necessary. You can have major purchases like a car, even in the 500s, you can have that. But you're going to have high interest, and nobody wants to deal with that. That is horrible. You really don't want to get yourself in a situation, especially because there's so many ways to build your credit, like so many ways. So you can get a secured credit card. That's something we offer. You can do split payments. I'll go over that another time. But there's just so many ways to build your credit. Why would you want to get yourself into a loan and then have a huge interest rate? It's just not a good idea. So I at least recommend a 680 before you try to make a major purchase. And if you're below that, I mean, you got to do what you got to do, get the car. but just be mindful. So that's new credits. And also, if you go to get a car, a lot of people don't realize that, let's say you go to the dealership and you have a 501 credit score. They're going to run that, and they may not be able to get you approved the first time, but they're going to say, oh, no worries, because of course they want to sell the car. So they're going to actually run your credit a hard pull more than once. I've had friends that have literally, after they got the car and everything with their 501 credit score, they get home a couple days later and they see that they lost 60, 50 points in their credit score. Why? And they see all these inquiries, all these different banks, all these different lenders that they never heard of. That's because the bank was trying really, or the dealership was trying really hard to get you qualified because you wanted the car, not knowing that it was going to give you so many inquiries on your credit and it was going to drop your score. And then you're going to walk away with high interest. So unless you absolutely have to, I really wouldn't recommend getting a car loan unless your credit score is higher. You really don't want to have to deal with all that. Okay, that's just my advice. Take it or leave it. The other 10% is types of credit. So this is installment versus revolving. So this would be like a car loan, a mortgage, personal loan, business loan. That's installment credit. The payment's always the same every month. And the revolving is going to be like your credit card, something that fluctuates versus, you know, based on how much you spend and how much you pay. So that's 10%. So you want to have a good mix of these two. You don't want to just have 10 credit cards. You do want to have an auto loan. You do want to have a mortgage. You do want to have maybe a business or personal loan mixed in there. Like I have one personal loan right now, and then I've got credit cards. So it's good to have a mix. So before I erase this, I'm just going to go over it one more time. So your credit score is made up of these factors. 35% is your payment history, the biggest percentage. 30% is available credit, how much you used on your credit cards. Keeping it under 7% would be amazing. You have 15% the length of history. That's how long those accounts were opened. How long have they been there? That's why you don't want to delete those old ones. You want to just keep using them. 10% is the new credit. That's the inquiries we just talked about. And then the other 10 is types of credits. If you just have all credit cards or you have only maybe one loan and that's it, you want to mix it up. You want to have a good range in there. So I'm going to go ahead and erase this. And I want to talk about something else because I think it's important to know that we all start at a different place. We all start from somewhere, right? We all start somewhere. So I talked to a friend the other day who got in the program, and she's got low 500 credit score, and she was really ashamed of that. And I said, look, don't be ashamed. You want to know where I started when I started this process? I'll tell you. A big fat 489. That's where I started. Now, that's because it's not always because you don't have the money, but sometimes it is. For me, life happens. Life happens. And you know what happened to me? A divorce, which took my incomes from 2 down to 1, and then also 14 medical collections because I had 3 surgeries, had a surgery on my neck, I had all this crazy stuff happen. I wasn't expecting that. I was on 60% disability from my corporate America job back then. This was about 3-4 years ago. And my original score was actually a 755. Guys, within 3 to 4 months, it went down to a 489. I did not know what to do. I've never had a 489 score before. Like, I was just like, what? And I had even gotten approved for a home loan the previous year with my high credit. I got into an apartment too with no deposit, no electric deposit, all that good stuff. And then all of a sudden I have a 489 and I'm just like, what do I do? Do I pay my collections? Like, what do I do? So I went ahead and I decided, you know what? I'm going to learn how to educate myself about this so that people that have this score don't feel scared or intimidated or ashamed. The only thing that you should feel ashamed for, guys, is if you don't take action on your credit. If you have a low score, there's so many ways that you can build it, like I said. So don't be afraid of the number. Just face it. Just face the number. Pull it up. Go to Credit Karma. Go somewhere. Find a free app. I mean, you can use Credit Karma just to start. At least you know where you're starting from. So I just want to say that because a lot of people think that it's so scary they don't even want to look at their credit. And that was me. I kind of ignored it for a few months, if I'm being honest. That only hurt me in the long run. If you don't know your credit score, I highly encourage you to go check your credit score right now because you don't want to have to deal with the repercussions. When you need something and you can't get financed, trust me, that is a big problem. So that's basically all I wanted to cover. This YouTube channel is going to be about, like I said, financial literacy, education, and creating a lifestyle that you deserve and that you want. And it all starts with that, because they always say that cash is king, right? So I'm sure you guys have heard this, but we say in this industry that credit is power. And the reason why we say that is because it really is true. Cash is king, but credit is power. Making 6 figures a year and you don't have a good credit score. I talk to a lot of people who, lawyers, realtors, doctors, business owners, brick and mortar business owners that have low credit. They make a lot of money. It's not because of that. They just don't, they didn't take the time to really look and learn about their credit. Or maybe, like I said, life happened to me. Life happens. Sometimes you're going to lose that credit score. But as long as you take the time to educate yourself, you can have $100,000 in the bank right now and not get approved for the car you want or the house you want. You need to have enough, because it's just unrealistic to say, oh, that's another thing I wanted to tell you guys. I really don't believe that cash is the most important thing. Of course, you have to have money, you know, to make money. But right now we have 68 million people in the United States with a 599 credit score or less. That should give you the answer. That should tell you something right there. 68 million people. So it would really be unrealistic to say, let's say you want to go get your house, or maybe, I can't really draw a car, so I'm just going to write it. You want to get a car, or maybe you want a business loan to start your business. Let me give you a little door. Maybe you want one of these things, but if there's 68 million people in the US right now with less than perfect credit, 599 credit score, what's the likelihood that that amount of people are going to have $100,000, $200,000 cash to put on a home or to buy a car outright? It's a very small percentage of people that actually have that kind of cash saved up. And if you do, congrats and kudos to you guys, because that's amazing. But it's not realistic when you're talking about this kind of a number. What needs to happen is that we need to start educating about matters of personal finance, credit, how it works. And that's why I'm here on YouTube, is because I want to give you guys value. I want to show you guys what to do. If you don't know what to do, put it in the comments or questions below. I'll have a link to my website, my phone number, my email, all that good stuff. But with this kind of a number right now in the US, it's just unrealistic to expect the average American to be able to pay out of pocket for a house. Most of the time you're going to have a home loan. That's just how it goes. So that's why credit is so important, because unless you're in that very small percentage that has all that cash saved up, great. Unless you're in that percentage, what I'm telling you is something that you need to learn. So once you learn about your credit score, you increase your credit score, you're going to be happy, hopefully. So this is a really, really, really important topic, and it's something we also want to teach our kids too. There's so much important information I can't wait to share with you guys. So I'm going to go ahead and wrap it up. I really, really appreciate you guys tuning in and staying with me through all of this information without all of the flashy fun stuff that most YouTubers have. And there's Ryder still taking a nap. So that's it for today. Thank you so, so much for watching. Please subscribe and like my channel. And I look forward to seeing you guys soon, and have a lovely day.